Good morning. Welcome to SOXX Insights. Today is November 7th, pre-market open. We had a really volatile session yesterday. A lot of stocks crashed, and the crypto market is on the weak footing as well. So we're going to go through a couple of things, our machine learning models, the credit market, before jumping into the charts. So I ran machine learning models for a wide range of assets, including equity indices, bonds, crypto, mega caps, and even the US dollar now. Here's a selection of what I think is relevant to today's topics. So today is November 7th. So our latest signals suggest staying long SPY, QQQ, and TLT. So both the stocks and bonds have had a signal of 1, which means the model prefers buying or holding in the past week. In contrast, the crypto world, Bitcoin, Ether, Solana, the model doesn't really like them, prefers to either sell or stay on the sidelines. Tesla, we just had a shareholder meeting yesterday approving Elon Musk's $1 trillion comp plan with 12 tiers of milestones. They're pretty hard to meet. So I do think that having him bought in on those big milestones will be really beneficial for the shareholders. The machine learning model has been on this whole time, preferring to either buy or hold Tesla. Meta, our model has been risk off since earnings. And actually, after that initial big gap of dipping, Meta has slid further down every day. So the model has been on the money. Microsoft the model has been risk on up until today because of yesterday's price action. So overall, the model thinks equity indices and some of the mega caps are worth owning still, whereas for crypto, investors should still be a bit more cautious. Year to date, SPY and SP 500 is up 15%. It doesn't feel like it because in the past week, we've had a bit of a decline and everyone's really panicking. The greed and fear index of CNN suggests extreme fear right now. So it doesn't really feel like we're up 15%, but we are above the 10-year average by this point of the year. And when we get to this point of the year and we're up this much, it's really hard to see the year end being below double digit. So this is what's worrying me a little bit this week, with the investment grade at the top and high yield at the bottom. So this is what worries me, the 29 basis point widening of the high yield spread that's now approaching the 2 standard deviations from the historical average. And every time we got to this 2 standard deviation line, we've experienced quite a big wobble in the markets. You saw that in March this year, saw that in August last year, July, August last year, the carry trade unwind, spring 2024, and the year end of 2023 to beginning of 2024. So we have seen this as a leading warning into a market crash. I do think it's good to remain a little bit more cautious until the credit spreads start tightening a little bit more. And this is a signal on whether investors generally have risk appetite or not. And just to visualize this spread widening, you can see that the high yield CCC and below spread have widened to almost 9%. And it's the shape of this incline that matters. We really don't want to see this period, see a similar spike like we saw in February. SPY, we've actually reached the bottom of this price channel starting from May. And the bottom of this channel has been tested a couple of times. It held in the October crash, and there's a 50-day moving average just below. So SPY has not yet crossed below 50-day moving average since May. So, and there begins to see a large volume support over here. So that's pretty important to me. I do think we can get a bounce today, if not Monday. And if we could look at a ABC correction in the near term, that looks more like this. And that could complete this wave 4, larger degree wave 4 pullback a bit more fully. And that pullback only takes us to the 0.23 retrace of this larger degree wave 3. So that's actually still a very shallow pullback, despite the fearful sentiment that you observe on social media, on the news channels. And I do think it's a bit ironic because only last week we've had a few big talking heads, big money managers, all saying that we are probably in 1999, we're going to get a parabolic rally very soon. And then as soon as they said that, we're getting a correction instead. So it's best never to listen to them. Right now, I'm looking for this channel, and if this channel doesn't hold, the 50-day moving average to hold, and then we are looking at the next bounce, the size of the next bounce before thinking about the final leg of this wave C. And of course, if we move decisively above this 690 mark, which is the top of wave 3 in a direct fashion, then this ABC pattern is probably invalidated. Then we can start looking at the wave 5s straight away. QQQ actually ran quite hot compared to SPY in October. It moved above its price channel that was established back in May. And unfortunately, we had a doji candle, which means the buy side momentum has exhausted. And then we've seen a decline since. We are now approaching this large volume zone. So there had been a lot of people buying in this region, and they could be dip buying again. And of course, we have the 50-day moving average as additional support. So it's hard for me to see it diving below 600 straight away. I do think this is quite important support region. Looking at the 30-year yield, so this yield chart has moved pretty much in line with exactly what we had projected back in September or even August, in terms of bottoming around this 4.5 region and now bouncing towards 4.73. So this 4.73 really does have sufficiency in completing our wave 4 target. And now I'm beginning to look at a decline towards 4.3 in the 30-year yield. And I do think this move higher in yields first corresponded with US oil moving a little higher during this initial period, but also the government shutdown meant that the Treasury general account is holding a lot of money that it can't release to the economy. Therefore, there's a lack of liquidity, and there's therefore a lack of dry powder for buying bonds and stocks. So that coincides with the broader market decline in the past week. TLT, it retested the 50-day moving average, which is what I had expected. And now I do think we are probably now looking at a move up towards the mid-90s. This 50-day moving average has held with this large volume zone here. So I do think this could be a pivotal point for moving higher. So this is a mirror image of the 30-year yield chart we just saw. US oil, it moved to retest the 200-day moving average, but got rejected again on Monday, and we're now heading back down. So this blue zone here was an important support area up until October. Now it broke below, this became a resistance zone. So now we're looking at a potential wave 5 decline towards the mid-60s. And this is really good news for bondholders, because the decline in oil prices will correspond with lower inflation readings. And when the inflation readings go down, there's more room for the Fed to be dovish, lowering the neutral rate and increasing the rate cut outlook, and that's better for yields. So for the US government and US bondholders, we want this oil price to move towards the mid-60s. Now we're looking at the MOVE index, which is bond volatility. So think about VIX for equities, and this is for bonds. And broadly speaking, you can think of this as the options market projecting a 72 basis point move over the course of a year. This is actually quite low compared to what we had in 2024 and the beginning of 2025. This is a good thing. Why is it a good thing? Lower volatility helps improve the value of collaterals. And high collateral value means there's high liquidity around. And that is supportive of risk asset pricing. And is also supportive of bonds as well. There's more money on the margin to buy bonds and stocks. So even though we have had a spike in the past week, overall, we are still at a very low level. So this doesn't quite scream like we're about to crash. So watch this closely. When you have a spike like we saw in February and April, that's the bond market sending a signal of the impending doom, essentially. Also looking at VIX, VIX climbed to 20. So you can think of VIX as, on average, what does the options market think the S&P will move in a year? So 20 is 20% in a year. And this is now on the highest level of the past 6 months because the S&P 500 has enjoyed a really long period of low volatility. But we are not seeing a blowout in this VIX measure. So we're not seeing the March and April spikes or what we had in the July-August spikes. So when VIX climbed to above 30, the equities market is probably going really nuts. And it hasn't done that just yet. Bitcoin, I do think this is a really important chart. What we saw this week was a very large drop in Bitcoin, breaking the support level that are highlighted in the 106K region. And if you look at the extent of this downside move from B to C, it was at the 1.618 extension of this wave A move. And if you just compare this to the winter period, when we had a crash in December to March and April, well, what we saw was that this wave here, this move down, was also the 1.618 extension of this initial move down, right? So we had a small move down, a new high, and a big crash into the 79K. And very similarly, we had a small correction, a new high, and a big crash here. So if this chart plays out just like beginning of this year, we could see a big bounce. So Bitcoin bounced to around 90K and then a new low into the 74K in April. Similarly, we could see a bounce into 110K and then a new low into this 93 to 95K region. So history often rhymes. It doesn't necessarily repeat. This is just a pattern that we need to watch out for. Now everyone's seen it. Maybe it won't happen because then not enough people will want to play this bounce, and we can just go directly further down, possible, because the information is out there. But we just want to be a bit more cautious in how the next bounce plays out. Ether. So if we look at what happened, as I highlighted last week, the best case scenario right now is actually this was an ABC completing for this wave 2. And the worst case scenario is that this is actually a 5 wave down and we just had a wave 3 and a wave 4 bounce. And now we're looking at 2,600 to 2,700 to complete this wave 5 of C. And in terms of momentum, this bounce was actually pretty weak. So my primary expectation is probably leaning towards the 5-wave structure that takes us towards 2,700. I hope I'm wrong, but it just means you need to be a bit more cautious playing the next bounce and waiting for the bottom structure to take shape first. Similarly, Solana, the best case scenario is that we bottomed on Tuesday, and that was the wave C. But this crash could easily take the shape of a 5-wave move, and this was actually just wave 3. We see a wave 4 bounce, and we get wave 5 low around 130 region. And that would corroborate with the Bitcoin chart as well. So on this note, so why could it be waves, 3 waves or 5 waves in this leg? So if we look at the shape of this initial bounce, that was almost near the wave 3 high. And similarly for the Ethereum chart, wave C can take just a normal ABC shape, or it could be a 5 wave. So it's not actually a strict rule whether the final leg would take shape in the 3-wave structure or 5-wave structure, which means it's quite tricky to catch the bottom. So it's actually probably always preferred to wait for the initial bounce to see a impulsive move up from the lows in terms of deciding whether we have bottom or not. So we're not there yet. Coinbase, I have become a little bit more pessimistic about Coinbase in the broader move. And I think there is a very strong probability that we're actually looking at an ABC structure here in wave 4, which could finish in the 250 region. So it's still trading in this wedge, and it's being supported by this lower zone and with the 200-day moving average just underneath. But looking at the shape of, if we get that bounce in Bitcoin and then a lower low, I don't think Coinbase can escape it. It trades with high correlations to Bitcoin and Ether. So if we have a lower low, we're looking at the 100% extension of this wave A from the wave B high. So this will be confirmed once we break below this wedge and the 200-day moving average. So Robinhood is a bit more tricky. I still hold the primary expectation to be moving in this wave 5 of 5. And I do think this will be the top of this cycle. But the latest price action is getting dangerously below this wave 4 low, in which case we need to think about the start of the downside. So at the moment, it's testing the 50-day moving average, which has held quite successfully a few times since May. And there is a big volume support in the 115 to 125 region. So we just need to see how the price action moves from here. If we can get a bottom before this wave 4 low, then we can think about the wave 5 target again. MSTR, I don't think the chart looks that constructive. And this could easily be a wave B high over here. And then now we're in wave C. And we're probably in the wave 3 of this wave C. So what I could expect is we get a bounce from this level, just because this was the prior bottoms that did find support. So there will be dip buyers trying to catch a good price. Strategy currently trades at 1.3 times its NAV. So that still sounds quite high, but it's the narrowest level we've seen in years. Sometimes it trades above 2 and 2.5. So at this level, there will be buyers who think, okay, this is reasonable. And I think crypto probably has bottomed. 1.3x is probably okay. We get a bounce and we could have one more low testing just below 200 to complete this wave C. BMNR, now this becomes a bit more obvious that this is an ABC correction from this wave 1 high. And this wave C could test the 100 to 120 extension of this wave A, which will bring us to the 31 to 35 range. So we're not quite there yet. Initially, I did think this could have been a 1-2-1-2 setup, but sadly, it broke the key support first at 46 and then at 40. So now we're looking at a much lower low here. SharpLink, again, this is an ABC correction from this wave 1 high. Unfortunately, moved past the 200-day moving average, but this shape was a bit more obvious. So I did map this out earlier than at BMNR. And the 100% extension is of this wave A is just below 12, so we're there now, and the lower end of this target range is 9.7. So I think this is an accumulation zone if we have a stop around 8.5, just below this low. SBET now trades at 20% discount to its NAV, so that implies an Ether price of 2.7K, which actually sounds pretty reasonable. And even if we had one more low in Ether, my target zone would have been 2.7K for Ether anyway. So you could technically get Ether to 2.7K itself, and this trades at par and still be trading around this price. Gold has stabilized, but that may not actually be as bullish as it sounds, because we've seen broader market correction, and historically gold was negatively correlated with SPY. So when the market drops, gold moves up as a safe haven trade. We've seen an absence of that this week. So I think gold holders are still digesting this move with the volume profile building here. And I suspect we're going to test the 15-day moving average. So now it doesn't necessarily mean we are seeing one more low here, but it could mean that it could consolidate while this moving average catches up before we get one more high in wave 5. Apple is on the tailwind of iPhone 17 deliveries. Investors are very bullish on the prospects. iPhone 17 is seeing higher lead time than this time last year in iPhone 16 outside of the US. So there is a bullish prospect. And even in China, the government is now giving subsidies to smartphone buyers. So some of the iPhone models, the lower end of iPhone models, will qualify for that subsidy as well. Amazon, it has more or less reached our wave 4 target in this pullback. I think if we get a gap fill, that would be quite deep. So I would really want to see a move directly higher now towards wave 5. But if we get the gap fill, automatically you are overlapping with this wave 1 in wave 4, which would imply an ending diagonal structure, and we'll have to bring down this wave 5 target. Google still seems to be in wave 4, and it moved into a typical range for this wave 4 pullback, which is between the 2.3 and 2.38 retrace of this wave 3. I do think we can get wave 5 directly above 300, maybe 310 in the next move. So I think Meta is a little bit tricky in terms of technicals. And this chart now looks a bit different to what I used to have after yesterday's price drop. So initially, I had this as wave 1, 2, and 3, and currently wave 4 pullback. And then we're seeing one more high in wave 5. But now that looks less probable than before, because that wave 4 pullback is getting pretty deep now. And what we could have potentially is a 5-wave completion over here already. And now we're looking more like a zigzag pattern where we have wave 1, 2, just below the all-time high. And now we're having a wave 3 down. And that would actually fit more nicely with the Elliott wave theory in terms of the aggressiveness of this drop. And even after initial 11% drop, we've been grinding down every day since as well. So all of that did feel like the wave 3 of 3 here, rather than just a standard wave A. And if you just flip this chart around and if you think about how wave 3 tends to behave, it's very aggressive. It's quite hard to catch a pullback. As you can see over here, it was basically a straight line in the bull side. So now it seems like the opposite is happening on the bear side. So I'm getting much more cautious. And I do think this wave, this 200-day moving average could be a new source of major resistance, as well as this volume profile here. So now I'm probably more playing for the wave 4 bounce and then see how far we go from there. So Microsoft hasn't broken this wave 4 low, but it's increasingly difficult to justify that this is wave 1 and wave 2. And if we break below this low, this wave 2 is completely invalidated. And what I think we should consider is this is a wave A, and this could be a wave B correction. That is an expanded flat, so it moves above the initial point of this wave 4. And then we're now in wave C, which can get down to 470 or even lower to this 200-day moving average. So in an expanded flat, wave C can trade as low as 1.6 extension of this initial drop. So we haven't quite got there yet, but if we break below this level, I would really consider that option. NVIDIA, the key question is whether we've topped in all 5 waves. I think there's a strong possibility looking at this now. It went aggressively up in this final phase of wave 5. Now it's moving pretty aggressively down into the 50-day moving average, the bottom of this channel, and the volume profile. So if we can hold over here and get a bounce, that could be a wave B bounce still, but we just want to see the shape of that bounce to say maybe we can get one more high, or actually that's just a corrective rally and we're going to be starting the beginning of the downside. Tesla tried to rally pre-market, but I think the wider market is holding it down at the moment. I think this could be a wave 1, a wave 2 low. It could retrace a little bit deeper, to be honest, as well. But let's assume this holds. We could be looking at wave 3, about 530. But if this doesn't hold and we get a deeper pullback than this, let's say to the 425 region, we could be looking at wave 3 above 525 instead. So it really depends on if we get a new low, then we have to adjust the targets down accordingly. Palantir, I have a strong suspicion that this was all 5 waves and we could have completed this bull run. We've had a record earnings session, again, revenue accelerating, etc. But the stock has reacted very badly. And it did coincide with a broader market sell-off. So it's not just Palantir's own problem. We're now just testing this 50-day moving average. If it doesn't hold, we're looking at further downside in 160. That could probably confirm this top being in. And SOXX has been pretty resilient even when NVIDIA rolled over. So I think this wave 4, we could test the 50-day moving average, but it has had a few fake dives now that were all shallower than I expected. So I just like to watch how the price action unfold for now. So that's it for this week. Thank you very much.